Hey, my name is James Nicholson and welcome to my YouTube channel. In this video, I want to talk about the best buy-to-let mortgages. You see, we've had so much bad news for landlords over the last few weeks. You've been commenting about it. I thought, why don't we go out there and see what good news is there, what great rates are there that you can get for your buy-to-let portfolio. Maybe you're a landlord or maybe you're a tenant just interested on how much does a buy-to-let mortgage actually cost someone. This could also be useful if you're looking to get into the property market. So there's a lot of uncertainty at the moment. We've got the Bank of England doing their rate meeting on the 6th. So could these rates move down? Possibly. So I'm going to talk about tracker mortgages. I'm going to talk about fixed mortgages. I'm going to talk about limited company mortgages and mortgages in your personal name as well. Now, if you're new around here and you haven't done already, do subscribe to the channel over there and hit that bell notification. We're on the way to 37,000 subscribers now. In January, we got 4,000 subscribers. I'd love to get close to that this month. And let's push some views on this video. How do we do that, you ask? Easy. Smash like, tick or like, do something to that like button. That really helps with the YouTube algorithm, and that's what pushes it out to more people. So thanks to everyone that does that. So, what is going on? Well, landlords have been hit hard during the recent years. Now, I know you might not have a violin out for landlords, but what is actually happening is a lot of landlords are quitting, and 30% of landlords have quit already. More than 50% of landlords right now are considering leaving the market. And what that means is that potentially the rental market could shrink while there's more demand, and that's going to push rental prices up even more. So landlords are being hit by quite a few things. We've got rising costs. Potentially, we've got EPCs that will mean that landlords need to spend £10,000 on each property. That is worrying a lot of landlords and making them quit. We've got tax that has increased significantly. And we've got interest rates that mean for some landlords payments doubled or tripled. So there's so much negative stuff for that. Let's look at rates and what deals there are out there. Now, at the moment, the average deals that we've got out there are, for 2 years, the average rate on a buy-to-let mortgage is 5.39%. And for 5 years, the average deal is 5.56%. Now, what's interesting is that has changed somewhat. For a while, what was happening with lenders is they were trying to get you onto 5-year deals, but people are saying they want to go on 2-year deals because they feel rates are going to drop. And that means lenders have been making the 2-year deals slightly more attractive to get people's business. Now, there are some crazy deals out there if you do some Google searches on these, but they have very high fees, 5%, 6%. You can get buy-to-let deals at 2.59% and 3.49%. Now, why are they lower than the Bank of England rate? Because the fees are so high, but the reason they're also lower is the stress tests are done on the monthly payment, not the fees. So that means some buy-to-let landlords that can't afford the affordability could pass due to this, meaning their monthly payment would go down and they would still make a profit compared to their rent. But at the end of the deal, they've got to worry about that they owe more money than they started borrowing initially. And because they're interest only, they haven't paid any of that debt down. And so they need to hope the market increases in order for that to work. What is if we look at the 5-year deal here, if you were to borrow £200,000 at the average rate of 5.56, your monthly payment would be £926. £926. These are rates for people in their own personal name. So that's quite an increase. And if you think about it, if they were around 2.5%, 3%, your payment will be around £450 to £500, and that's what landlords have had to contend with, is their mortgage going up from 500 quid here until £926. That's a big difference, and that's why rents have gone up massively. If we look at the limited company though, what's happening for limited companies? Well, the 2-year deals, the average rates for 2-year deals is 5.64%, and for 5-year deals, it's 5.81%. Why is that more expensive than if you have it in your personal name? It's purely down to competition. There is not as many lenders in the limited company buy-to-let sector, so they don't fight over deals so much. That could hopefully change. We've got Metro Bank that has now decided they are going to go after small landlords, and so being a bigger bank, that hopefully will get some competition and bring these rates in line with the personal owning of a property. If you had a £200,000 mortgage on this, on a limited company, your average payments would be £940 a month. So more expensive than the limited company. More expensive than the personal rate here. Now, what is the likelihood of tracker rates decreasing? Because some people are looking at potentially getting a tracker mortgage at the moment because they feel rates are going to go down. The Bank of England said in December they felt rates were going to go down 4 times. The markets adjusted and said they feel that rates will go down 3 times. But we are expecting a rate cut this week, even with the crazy stuff happening in the stock market with the tariffs that are going on, Canada and Mexico, that potentially have been removed already. I do still think that the Bank of England will cut rates this week. So let's have a quick look at some tracker rates here. And the best 2-year tracker rates that you can get at the moment. So if we have a look here, so the best tracker rate that you can get at the moment is with HSBC, and the rate on that tracker is 5.84%. So 5.84%, 0 fees on that, and that's 1.09% above the base rate. So if the base rate goes down by a quarter, you're going to get to roughly 5.5%. But what you're gambling on with that is that rates will drop multiple times in the year. So if they get to 4.5%, then you get, if they go down below 4%, you're going to get an even better rate here. So this is what people are banking on that. So HSBC have the best deal if you've got a 40% deposit. If you've got a smaller deposit, TSB have the best rate. So I'm just giving you 2 lenders to go out and check. And the TSB rate is 5.59%. However, there are fees on that. So that brings the cost up. The fees are £1,004 randomly. I don't know why they're a random amount like that. So TSB could be an option if you're looking for a tracker mortgage. What about if you want to get a fixed mortgage? So in your personal name, the best deal at the moment for a 75% loan to value is Bank of Ireland. So the Bank of Ireland have a deal that is 4.99%. But overall, with the fees, that's what brings it down. It's 4.95 on the fees. What about if you have a limited company? Who should we be checking out in that one? If you're looking for a limited company deal for a 2-year deal, a company called Vernon Building Society, they have a deal that is 5.99. And that has 4.99 in fees. So that's a good option there. So what would you do if you feel rates are going to go down? Potentially look at the tracker. I do feel rates are going to go down. I think that's based off the fact that the economy is teetering on the edge of going into a recession. Now, if Trump does go through with these tariffs, since I'm recording this, he's backed down on the tariffs with Mexico. He's had conversations with Canada, so by tonight, he'll have backed down on the tariffs with Canada and claimed the victory on the border, I'm sure in that scenario, then maybe the economy is going to have some uncertainty, because are those tariffs going to come back? I don't know for sure. You don't know for sure. But it's the uncertainty that is making being a business owner quite hard for a lot of people if you import or export stuff. And so that could really hit those businesses and bring the economy down. The UK economy is very, very close to a recession. Now, if we go into a recession, interest rates are likely to drop. In that scenario, then that's good to be on the tracker rate, because things are going to go down. You've also got the flip side. If these tariffs happen, they could bring back inflation. Now, I don't think it would increase rates, but it could definitely slow down massively the speed in which they're cut. So do go out and check what's going on. Here's some great deals that you can go and have a look at. HSBC is a great tracker. TSB is a great tracker, but always speak to a broker. Can you afford it if rates go down? Can you afford that is very, very important that you can. It is a gamble, but with these lenders as well, there isn't penalties if you leave. So if rates did start creeping up, you could leave and then go onto a fixed mortgage with somebody in that scenario. Let me know where you think rates are going to go. Are you a fixed person? Do you like certainty? Or are you someone that likes to gamble and take a risk and look at a tracker mortgage? Do comment below. Do smash like. Do check out all the other content on my channel as well, including this video right here.